Hey, good morning, my friends. It's Tuesday, the 14th of November, and I'm just sitting here having my cup of coffee and got up quite early and looked at the markets this morning. And I was just thinking about interest rates because everybody's just thinking and talking and wringing their hands over interest rates and how difficult it can be. Some of you may have seen the graphic that I put up about interest rates in 1971, and they were, I think, 7.33 was the average. And the idea was if people in 1971 said, we're going to wait until rates go down before we buy a house, well, you would have waited until 1993. So that means you would have been renting for 22 years. And everybody knows the interest rate on rent is 100%, right? Because you're not building any equity. However, in that same 22 years that you waited for interest rates to go down, the value of homes quadrupled. So if you bought a house for $100,000 in 1971, in 1993, it would have been worth $400,000. Just to think about, because it's important that we understand the power of equity and the power of growth in the real estate market. So for all you real estate agents out there, this is a great way to spread the word, right? You can continue to beat the drum and tell people home equity continues to be a factor in wealth building. And so whether you're a just a single family residence first time home buyer or whether you're an investor, rate is an important thing. So I just kind of went online this morning, looked up average interest rates and where they're at on the retail sector. Keep in mind, I'm a wholesale mortgage broker. So operating in the retail channel, um, I haven't done that for well over a year. And so I just want to point out that I think it said 7.83, 7.88, 7.83, right around there was the average. And so I operated on a $350,000 purchase at 7.83% interest with 20% down. That was a $2,021 monthly payment. So I just went ahead and dropped it down to interest rate of 7.375, and that brought the payment down to $1,933, saving 88 bucks a month, which is $1,056 a year. And so in your first 5 years, you'd be saving about $5,300 just for half a percent better interest rate. This is the important thing about shopping interest rates. And then I went down to 6.875 because I just happened to lock a duplex yesterday afternoon at 6.875% interest. And that would be a payment of 1,839. Keep in mind that's principal and interest only. And that would save you 182 bucks a month. That would be $2,184 a year. That's a lot of groceries or a lot of gas. And that would be just under $11,000 in the first 5 years of your mortgage that you would save. So I say that to say always make sure that you're shopping. Always make sure that you're getting interest rates and you're getting loan estimates from more than one lender. It's always, I think it's just super important. I mean, when people go out shopping for cars, they don't buy the first car they see, do they? Same thing shopping for houses. Folks, you're thinking about waiting for interest rates to go down. The expectation is they might go down in the spring of this next year. Will we ever see 3% again? Probably not. But then again, that was an anomaly. I think COVID had a lot to do with that. There were just some things that were happening. It was the perfect storm. So for those of you who are sitting on interest rates at 2.75 and 3%, good on you. That's great. Let's make sure we take a look and see how you're doing with the rest of your finances. So, Larry Berger here, Empire Home Loans, November 14th. Hope you have a good day. Thanks for listening. I'll see you soon. Bye.